69% of them gone. So there is turnover in these indices. It's just slow. But what they are capitalization weighted, meaning they have to buy more of things as they become expensive. So they get more and more and more concentrated. And we saw this phenomenon in 2000, and you get to a point where silliness, right? Cisco at 286 times earnings. And people finally wake up and say, oh, that's bad. And you have a correction. And here we are again. And you got all these companies now trading 100, 150 times earnings, 30, 40 times revenues. And people are like, no, it's different this time. Four most dangerous words in investing. And it will end. But when people try to short it, and we've talked about this before with MicroStrategy in 2000, you can try to short the stupidity. And MicroStrategy in 2000 is very different than NVIDIA. It's more like Cisco and Microsoft to NVIDIA. Perfectly good. Or Intel. Intel went up 20-fold. Think about that. It went up 20-fold in 4 years because it was going to change the world with AI. It's funny. Back in 2000, they were talking about AI. And
in crypto. Then the other thing that happened is we've got our VIP tickets that just went live. There are only 60, and we've actually had a bunch of them that just sold out even in one day. So if you want to be a VIP at the conference, make sure you get your ticket. And again, use code MARGIN10 to hang out with me and Mark March 18th to the 20th in sunny London.
Cheers. That's another thing I've been thinking recently. So I've sort of given you my thesis about, I think of these things as commodities for the most part. And, sure, people who trade commodities talk a lot about commodity price shocks. But the reason why nothing ever fully goes parabolic forever is because there's kind of this societal pressure to put downward prices on commodities because we consume commodities, and it's a massive problem if oil goes to $5, right? Like policymakers move heaven and earth, but also because people find substitutes, right? So if a commodity gets expensive enough, people will go into other things. Yep. I think that's the history of crypto in a nutshell is, yes, Bitcoin has this perfect programmatic, never going past 21 million, but I think people find other substitutes for it. And that's sort of whenever I used to hear these people make this criticism of Bitcoin that, well, you can just create other coins. And I was like, come on, guys, that's not intellectually honest. That's, you can't create more Bitcoin. And it's like, and I've kind of, yeah. But Mark, I want to zoom in on, we also had an FOMC this week and we had a QRA. QRA is quarterly refunding announcement, which used to be something very mundane and not something that not a lot of people paid attention to. But because we're running such massive deficits, all of a sudden, the composition of bills versus coupons that the Treasury issues to fund itself matters quite a bit because it depends that basically what the Treasury is getting to do is dictate how much duration the market is absorbing. And in such high numbers, it actually matters. So let's talk about the FOMC first. So I think to sum up, the headline that most people took away from the FOMC was that Chair Powell is taking a March rate cut off of the books, right? That's no longer within the realm of possibility.
Shocking.
Cold water on it. Yeah, it's unclear to me how much, and the market sold off. Market sold off a little bit after, and he, as he was going through the questions of reporters, it seemed to get a little bit more hawkish. He talked about the labor market, et cetera. But it seems like now, basically, when it's all said and done, the market has just pushed rate hikes out a couple of months, and it doesn't really. Maybe we're getting a couple fewer than we thought we were. Maybe it's happening not in March, but in May or something like that. But I mean, what was your takeaway from the FOMC this week?
Well, I mean, a number of things. I mean, and this certainly one of them. I mean, look, the idea that they were going to cut rates now it was always silly. And I guess the market, right? And what is the market? It's the collection of the participants. I think actually believe they could bully jobs. And so no chance that you could just say, we're gonna cut. Now, does that really matter? Well, the market response was pretty quick. To me, the more important thing from the FOMC was the removal of the lines about how stable the banking system is. And if you've been watching in the last couple of days, bank stocks are getting cremated. And the BTFP, Bank Term Finance Program, BTFP, ends March 11th, right around the Ides of March, which is not really a good time normally, historically. I think, pick a number, 15%, 20% of banks are going to be bankrupt, like out of business. And what's going to happen? And this was part of my presentation, in that power is determined by powerful people. And there have been powerful people in charge for a very long time. And part of the reason that the Second National Bank charter didn't get renewed in the United States was because Andrew Jackson was like, all these European families own the banks. Why do we want to be beholden to them? So he canceled the charter of the National Bank, and we went in a free banking era. And it was crazy. I mean, it was literally the Wild West. Texas created their own money, and companies created their own money, and other states created their own money. And
a larger bank will come in and subsidize the losses, absorb it onto their balance sheet. And again, from that perspective, I can see it works, right? Because the alternative is that the taxpayer and everyone has to bail them out. So it's better if a bank can bail them out. The alternative is exactly what you're describing, that control ends up getting concentrated in a very small group of people. These large banks are sort of fourth arms of the, arms of the state in a sense. But the other problem is that the customer of a large bank is a large corporation. It doesn't make sense for JP Morgan to prioritize small businesses. And there's this funny dichotomy. This was a big light bulb moment for me during COVID. I assumed that corporate America, big corporations, employed most people in the US. I was wrong.
Nope,
It is,
nope,
they employ 1/3 of people in the US. 2/3 of people are employed by small mom and pop shops. But so do you see the discrepancy? It's like 1/3 of the employers of the United States get access to all the credit, and then 2/3 of the net employers of the United States do not have access to credit, basically, or much choked off access to credit.
It's all about this, Michael. Come on, baby.
I know. I just think it's like incentives are converging here. It just makes a not great thing. But
it's all about the pyramid. It's all about the pyramid. It's all about concentrating power at the top. And you do that through the control of money. And Thomas Jefferson said it, right? He said, I think, banks are more powerful than standing armies. And if the, people of the United States ever allow the issuance of their currency to be controlled by the banks and corporations, they'll wind up, their grandchildren will wind up homeless and penniless on the shores of the country that their forefathers founded. And he's right. I mean, wealth, Phil Graham was there, and he was talking about his book, which says that income inequality isn't as bad as air that's had no basic growth. And Apple's having the opposite, right? It's down meaningfully. Not as much as 15%, but it's down because their revenue is the same today as 2 years ago. Like this, that's zero growth. So why would you? But they keep paying out dividend, they buy back shares. So look, you lay off 14,000 people. Turns out you have some free cash flow that you can give to Warren. And that sucks. That sucks for those 14,000 people that got laid off. Imagine, think about this. Within a month, you lay off people because you're struggling. Oh, but I have enough money to buy back stock and pay a dividend. Fuck that. Fuck that. I'm sorry. That just pisses me off.
Mm. Well, I get it, but also, look, this is what investors of a certain there are a bunch of pools of capital in the world, and they all have different risk.
Fine. It's all about power, politics, and populism. The power is saying you need to buy back stock to make me richer, because my boomers, who I've promised all this shit to, right? I promise me, octogenarian financier promised all this stuff, and not finance politician, octogenarian politician. I promised all this stuff, and I can't make it work. I'm bankrupt. I don't have enough money in Social Security or Medicare or Medicaid. I don't have enough money. So you, stock market, need to go up. And so I'm going to keep rigging the Ponzi, and I'm going to keep, because here's the thing. if you price stocks in dollars,